Alrighty, let's go ahead and get started. Welcome everyone to TradeFinder Live. Great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. Main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. Other than that, I know we have the markets seeming to calm down on tariff issues and bond rates are dropping. At least that seems to be the case for today. So where do we go from here? I'll leave that for Rob to address. So Rob, you out there?
I am. How you doing, Zach?
Doing great.
Happy
Yep.
Tuesday afternoon to everyone. Welcome to Trade Finder Live. Just let you know ahead of time, this is going to be an abbreviated session as well. Awful lot going on. And when you're the leaders in trading with AI, with all the AI conversation that continues week after week after week, you get asked to do a lot of events, and am trying to work out how to help people become more successful using AI trading. So, with that, let's go ahead and jump into the markets. I did show this, and Zach, sorry if I catch you off guard here, but we have this zigzag pattern that could have an extended C wave up to the 161.8% level. And in the zigzag masterclass that I did last week, I showed how there is an unusual scenario where there are three zigzags that are all given the exact same target. It's not unusual to have multiple complex C waves. I've seen that before, but in this C wave here, we have the zigzag right there, and then we have a zigzag that's complex in that C wave, which is right there. And now I have the black screen of death. Give it a second, it'll come back. But basically, what I'm trying to say is that there are three zigzag targets, and I've seen that before. I've seen complex C waves and then a complex C wave within a complex C wave before, but never where they all gave the exact same target price. Sometimes they were in the area, but rarely did they have the exact same target price. So I'm going to ask Zach to put the link to that Zigzag Masterclass. It's free. And if you haven't watched it, I think you will find something new and different, even if you're an Elliott Wave fan, and especially if you're an Elliott Wave fan, because based on the comments that I get in the YouTube updates, the market updates that we do every week, I can tell you that there are people that look at the letter of the law and they don't understand how a zigzag can be directional because it's classified as a corrective pattern. And we go through and talk about why it's labeled as a corrective pattern, but it is indeed a three-wave directional pattern. Now, it can be a corrective phase, but it's always a directional pattern. A flat is sideways, a triangle is consolidation, but a zigzag is directional in nature. So you can see here that not only do we have the complex C wave, but it's further complex in the fact that there's a triangle in this C wave. So we've got all kinds of complex stuff going on here in the world of Elliott wave. And to narrow it down for you, basically, those three zigzags are stating that we're likely to come up here and test these highs, the wave 5 highs that occurred in February. It's not saying we're off to the races. It's not saying that all is good and the market's going to go generate new highs. It's not saying any of that. What it's saying is that we are likely to test that high from February. So if you want to learn more about how you can make a zigzag a directional pattern, you will want to join or at least view that Zigzag Masterclass. I just can't tell you how much I enjoy trading zigzags. And I didn't create this on my own. I got this from reading the works of Elliott, not just the published works, because there's a couple books published by him, but not a whole lot. So it's going to reading his notes where he comes up with guidelines. And the reason that I started looking for trading zigzags is because Elliott himself felt more confident in the corrective patterns than he did in the five-wave pattern. So a flat or a zigzag or a triangle, he had more confidence in the results of those than he did in the five-wave pattern. But yet, if you go out on the internet, you see the five-wave pattern, 1, 2, 3, 4, 5, followed by an ABC. And the ABC is the corrective patterns, and those are normally flat, zigzags, or triangles. So if you do want to learn more about this, then go there. And if we do happen to see this move up and test those wave 5 highs, there's no better qualification than that. And I've been talking about it. The other rule, and this is an Elliott wave rule, is all five-wave patterns start with a zigzag. Not every zigzag turns into a five-wave pattern, but all five-wave patterns start with a zigzag. In other words, the fact that we have this zigzag and we have two complex C waves, I wouldn't be surprised to see this relabel at some point as a 1, 2, 3. Now, maybe it does, maybe it doesn't. Again, not all zigzags turn into five-wave patterns, but if you have a five-wave pattern, it was always preceded by a zigzag. So that's enough on that. We're moving to the upside today. We had the JOLTS report out today and looking for the big, they call it that because it's the government's number jobs report that'll come out on Friday. We'll see how that plays out. But the thing is today that's helping is the bond market. And we've talked about this. There was a zigzag that was completed down here at the 100% level. That was the completion of an extended zigzag on the C wave because the B wave was basically the 38.2% level, which means 61.8 is your target, 100% is your extension. And in some instances, you'll get a double extension down to 161.8. That doesn't happen very often. In this case, it went down to 138.2. So we didn't quite make it to 161.8, but even that was a further extension. I'm not a big fan of the 138.2% fib level because it doesn't show up that often, but it showed up in this case. And now we're getting a little bit of a bounce up. Yesterday, we had a bounce down in prices. This is a TLT, so this is the 20-year. This is prices. Prices and yields move inversely. So prices moving up today means yields are moving down. We do have the yield curve non-inverted, but it's fairly flat. You're getting a little bit more interest for holding bonds or treasuries longer term, but not as much as a super healthy market. But at least we're moving in the right direction. So is this bounce up today in TLT just simply closing this gap from yesterday and we're going to turn and head lower, or are we going to turn and move back up? And what normally happens, if you're wondering, when a zigzag completes, normally you retrace the C wave. So that means that we would have prices back up to this point. So we'll watch it. We'll see how it all plays out. And just to give you a preview, I'm going to tell you now what the case study consideration for this week is going to be. It's going to be on GSK, and it's one of the AI results from the Hub organization, which is the software that you're seeing. If you haven't gone to hub.com, HUBB.com, and gotten a free copy of the software, I have no idea what you're waiting for. You get free Elliott Wave. You do have an opportunity to subscribe to the AI signals if you want, or you can watch that Zigzag Masterclass and get the opportunity for a significant discount in those if you want. But again, the class is free. It's up to you whether or not you want to further subscribe or not. That's completely up to you. But GSK, you can see, has an 86% score. That's very high. Oftentimes we'll get near 90, but very rarely above that. Nothing's 100%, so you never see a 100% score, even from the AI that looks at over 300 data points. But we also have a zigzag within the wave 3. And note that the 100% extension on the C wave is the exact same price as the AI target. The exact same price. Again, fairly unusual. So we had a little bit of a separation from the 10-day moving average yesterday. We came back down today. So I think today is a good entry for this. So we're going to be looking for GSK to move up to that 100% extension as well as the AI target. So that's going to be our case study consideration. And that gives you an idea of what the AI offers. And the results have been phenomenal. I started trading zigzags within wave threes because I didn't understand why we were avoiding the wave three, which is what most of the general information on Elliott wave states. The three wave is the strongest wave, but stay away from it because you don't know where it's going to end. And basically that means that you don't know where the three wave is going to end and the wave four correction is going to begin. And that would be a move if you're trading in this case to the upside and you get a wave four correction, then you have a significant move lower. And that's difficult to find out. But I submit to you, if you can find a zigzag within the wave three, you have a really good idea where the wave three may end. And why avoid trading the strongest of all Elliott waves, no matter how intent you are. And at EWO, Elliott Wave Options, EWOTrader.com, we don't look for being the purest of Elliotticians, labeling every single move. I look at the Elliott wave as a trader. So from a trader's approach on how can it help in the trading. So if we can get Elliott wave, which I would submit to you has a higher percentage accuracy than any other indicator, again, not 100%, and in the high 60% range. But then you add in the AI on top of it, and you have the two agree, you're up in the 78th percentile of being right. And imagine how well you can do as a trader if you can be right 78% of the time. You're in the upper echelon of trading. So there is an AI summit coming up. Perhaps you'll hear about that, where we're going to be talking about all things AI. I've been invited to speak in that as well. And my comment has been, you're either trading with AI or you're trading against it. The Hub organization has been using AI since 2020. I think they were the first to create these kind of signals and send out actual verifiable alerts. I don't know that for a fact, but they're one of the early ones, if not the earliest. And that's why I'm getting asked to speak on AI so often. Everything is AI now. And when we look at this GSK, you can see that we have this break above resistance in this area here, which were the highs back in March. It was the A wave high on the zigzag. We broke above it. We're testing it today. We're a little bit above the 10-day moving average, but I think today is a pretty good entry for that. So that's going to be our case study consideration for today and furthers my point on the value of learning zigzags. If you're not trading them, I really honestly think you're missing the boat. So I've already showed you TLT. I know you guys all like TNX, at least you do on the US market updates. So here we can see that rates are coming down on the 10-year as well. And that was yesterday's quote. Today it'll be back down. If we can break this 50-day moving average, then perhaps we're going to come back down to the point of this triangle. But everything changes from day to day with rates. So we've got to wait and see how that's going to play out over the next couple of trading days. Now we go to the Dow. We take a look at the DIA. I've been really looking at this with interest because I feel like maybe there's a better bang for your buck on the DIA than there is on the SPY. Now, the SPY takes the Mag 7. They've all had a big, nice bounce. Is that where things are going to continue? They were talking about that in depth in yesterday's markets, the market pundits and the financial networks, talking about how the Mag 7 is back, et cetera. All that makes me a little bit nervous about it. Maybe that was the early bid, but look where we are here on the DIA. We have 420 as a tremendous level of support and resistance going back to last winter before the end of the year. It acted as support again in January, basically support resistance in March. We broke below it with all the tariff stuff. We came back up. We've been consolidating and creating a triangle right here, and we're trying to break out of it today on the Dow. I think this is a place to look because this is all clean air, using the racing analogy. If you're racing out front, you get clean air. You don't have all the exhaust and tire pebbles and everything else coming into your radiator, your engine runs cooler, and you get a chance to accelerate further. I think the Dow might be the place to be moving forward up to this 450 level because we had a quick move down from 450 to 420 before. There's no literal resistance in the way between this move. Now, today means nothing. We're breaking out today, but we need to see if we have a follow-through day tomorrow. If we can get a follow-through day tomorrow, I think that's a good place to be as far as trading. If we go back to the SPY, we can certainly move higher on the SPY, but you can see that we don't have as big of a move left up to where those wave 5 highs were in February. There's a little bit, but not as much as the Dow. That's why I think the Dow could possibly outpace the S&P over the next couple of weeks. Could be completely wrong. I'm wrong a lot, but that's something of interest. Then we look at the Qs. The Qs are problematic, and this is where I was opining that maybe they got the early bid and it's going to fall back a little bit because you can see we're trying to break out. We have a triangle here on the Qs, but it's not a symmetrical triangle. It's an expanding triangle. So it's a triangle that's flipped backwards. The point's on the left-hand side rather than the right. And we haven't broken out of that yet, but if we break out, basically we're going to run into that February high rather quickly. Now, maybe the Qs break above that level. Now, if they do, then the Qs and the Mag 7 are off and running. But they're going to have a little bit of resistance, and the Qs are probably going to get there first. And if they do, then we'll have to wait and see if they back off a little bit. And my thesis on perhaps the Dow takes over for a little while could play out then. But there's not a whole lot of room on the Qs before we hit the next level of resistance. So let's watch that. And then the IWM, the small caps, and gosh, there's so much commentary on the small caps right now. But you can see that we have this triangle. Now we do have a very solid wave 4 corrective level at the 50%. You can see we bounced down. We created a triangle, and we're trying to break out of that. The IWM will become interesting if we can take out this wave 4 high. So don't jump the gun here. We're going to wait. We already have a case study consideration on the IWM where I did feel like we're going to come up and hit 220. So there's no reason to do anything else with it. Perhaps you're already in it and you're having a nice day today. But let's see if we go up and hit this 220 level. That could still create the wave 4 at 61.8. And that's where resistance is. But we would want to see, if you're not in the IWM yet, you would want to see a little bit of follow through tomorrow. And then I do think we hit 220. I think that would be the key. So let's get to the metals real quick. We'll take a look at gold, which broke out yesterday, pulling back today. This is why I keep talking about the fact that you need a follow through or confirmation day. Looked like a breakout yesterday. The market loves to give head fakes. Perhaps we're just coming back to test the breakout and then we take off again in gold, but you can't say it yet. We haven't had the breakout with the follow through. So you have to respect the fact that perhaps we aren't ready to break out yet, or again, maybe it's a breakout, a test, and then we move and give the follow through and confirmation, and then gold goes higher. Silver had a really nice day yesterday. We had some pretty good trades on this from various aspects within ewotrader.com. Big, huge breakout, consolidating today. You can see that we're not breaking back down like we are in GLD. And I still think that there's going to be a point in time where SLV outperforms gold and catches up. But as I've mentioned before, there's always the possibility that gold breaks down and comes back down and meets SLV. When you have these triangles in the world of Elliott wave, triangles trump everything, even a zigzag pattern. When you have a triangle, it can break either direction. It doesn't matter what the Elliott wave pattern is. You have to be prepared that it can go either way. So be cautious of that. Be careful of that when you're looking at these, and wait for that follow through or confirmation day. Looking at the dollar, we traded down yesterday. And as long as we don't take out this wave 3 low, I think we're okay. I like this consolidation right around the 100 level. I'd like to see the dollar trade between 100 and 104. I know we want to keep the strength of the dollar. We don't want to lose it. And with all the tariff stuff and firing bullets back and forth with other countries, they're dumping some dollars. They're not buying as many. But they don't want to crash the U.S. economy. We're the consumption engine of the world. So yes, there's negotiating going on, and as I said, bullets being fired. Forgive the analogy, back and forth, but shots across the bow, if you will. But as long as we don't have a big significant move in the dollar, I think we're okay. If we do, if it gets to the point where it's so ugly that we lose the dollar, we have a whole lot of other things to worry about here in the US. So we don't want to see the dollar go down too far. We want to see it hold in here in this range. In my opinion, I would be quite nervous to see the dollar break 97.5. But until it does that, I think we're okay. And all we can do as technical analysts is analyze the data that we have at any given moment. Now let's take a look at the energy sector real quick, then we'll go into cryptos, and then we'll take questions, Zach, just to give you an idea of what's coming up. So there was a big feature on CNBC yesterday. They had a guy there in Alaska talking about this new pipeline, multiple segments regarding that, and the need for natural gas and how beneficial that's going to be for the U.S. in the form of natural gas. This new Alaska pipeline is going to create a lot more supply. The markets trade on supply and demand driven by fear and greed. So if we're going to increase the supply, how much do we increase it? Is it enough to where it's going to not let the price go up because the supply will meet the demand? That's how pricing works. If the supply meets the demand, then there's no increase in price. If the demand outpaces the supply, then the price goes up. So we're still wondering if we're going to get this 5-wave impulse move on UNG. We're still in this triangle, not a decision made yet, even with that big feature yesterday talking about how beneficial it's going to be to U.S. natural gas companies, et cetera. And for the U.S., it's not enough to create that view, if you will, that there's going to be a demand that outpaces supply. Not quite there yet. Maybe we get there. Oil now, on the other hand, is breaking to the upside out of its triangle. And if we can close here today, and we don't know that yet, but if we can close here today, that would count as a follow-through day, and you could expect oil to move higher. I've said that I think oil is going to stay. I moved the range down because it broke below my 65 range down to 60 to 80, I think is where oil stays this year. And if oil starts to tick back up, that is going to create, because right now the U.S. companies are like, the price of oil, I don't know if it's worth the cost of exploration and new drills, et cetera, new wells. But if we can get a tick up and a run up, that will spur the U.S. companies on for more domestic production. And again, if that happens, then the market will be looking for more supply. And that will probably bring prices back down. That's why I think we stay in this range. I think OPEC is managing this, OPEC Plus now, very well. They need to keep the prices elevated so they can make as much money as they can on the supply they have in the ground, but they don't want oil prices to go so high that it drives everyone to electric vehicles. So they've got some work on their hands, and so far been managing it very well. So we take a look at the crypto. So I'll go into, now I know a lot of you like IBIT. I've tried them both. I personally prefer BITB. They're very similar. They both have very liquid options. We like to trade options, obviously, at ewotrader.com, LE Wave options. So options is in the name. We came back down. We broke up above this resistance level from December and January. We tested it, and we're trying to hold that 10-day moving average. So when we get the calendar rollover, I know Bitcoin trades 24/7, but it does give you a calendar rollover for end-of-day charting programs like this. And if we can hold above the 10-day moving average today and then get a further bounce tomorrow, then the crypto world may be off and running. I've been opining about whether or not Ethereum can play catch up here and maybe outperform Bitcoin, because here's another one of those big vacuums like I was showing you on the DIA. where if Ethereum can catch a bid, we had this big quick move up, and we've been consolidating for going on 3 weeks now in the same exact area that we consolidated in February. And if we can break higher from here, and that's an if, has to do it first. If we can break higher, then I think we have a quick run on the ETHW up to 25, but we're not there yet. We need a break with a follow through. We had a breakout attempt here, but no follow through day. Breakout attempt here, no follow through day. Even that one was a breakout attempt. So you can see the importance of that second day, the follow through or confirmation day. All right, Zach, with that, I've gotten through it pretty quickly. Take some questions. And then I've got to move on to another commitment in about 10 minutes. So we've got 10 minutes for questions.
Sounds great, Rob. We'll get right into it. We'll start out with a question here from Alexandru on Oracle. Oracle at 180.
Gosh, I love TradeFinder. You guys come up with such good questions. This is such a great community. Hope you'll invite some other people to join us in TradeFinder. It's probably my favorite session of the week. And Oracle is making a nice move up. I do think, though, that you need to see 170 broken. If you're in Oracle, great, congratulations. I wouldn't get out. But if you're looking for an entry, I would want to see it break above resistance at 170 with follow through. And if it does, it's probably going to this 190 level right through here. And if it hits 190, is it not going to hit 200? That would be the conversation we would be talking about once it got up there. So again, if you're in it, I'd stay in it. If you're waiting for an entry, I'd let it get above 170 first. Nice zigzag in there too, by the way.
Yeah, absolutely. I was just about to say, follow it up with Amazon at 220.
Amazon, we have a subscriber at ewotrader.com that is a big Amazon guy, trades collars on it, which is a super smart way to trade stocks that you want to own for the long term. I've been on record multiple times in our insiders meeting that we do for our alert subscribers on Thursday nights, saying that I think any move down on Amazon is a buying opportunity. You had this move down with all the tariff stuff moving back to the upside. Amazon is in everything, and it's going through an extended consolidation here. Now, it does have barely still a qualified 5-wave to the downside pattern. That could play out if the market falls apart. If something really bad happens and the market falls apart, the generals fall too. They're the last to go. In other words, the market leaders, and in the Mag 7, Amazon. But right now we're above the 10-day moving average. We're trying to break above this 210 level. I would want to see on Amazon this wave 4 high taken out. If it does, probably disqualifies this 5-wave to the downside pattern. So once again, if you're in Amazon, I wouldn't get out. But if you're waiting for an entry, let it take out this wave 4 high first. And then I think you have a pretty good run up here towards the 240 level. But Amazon, I think, again, is a buy on a dip for the long term. With options, we tend to trade shorter to intermediate term. But for the long term, I think Amazon is a great place to be.
Indeed. And we got a question on DDOG. What does that chart tell you?
Yeah, we haven't looked at that one in a while. Datadog is moving sideways. We do have a pretty well formed 5-wave to the downside pattern here as well. Nice sideways consolidation. You can see the resistance right here at 120. It's got to break that level. It's got to break 120. I would wait and see on this one. Once again, if you're in it, I wouldn't get out yet. If you're looking for an entry, just be patient. Wait, let it break above 120 because you've got a big run there, probably up to 150 if it can break through that level. But it's got to do it first because all this consolidation under resistance can either give you the launch pad effect that Zach and I have talked about in the past from growing up on the Space Coast in Florida, having both my parents in the space program, use that analogy of a launch pad where you go sideways and then you get a blast off. Maybe we get that out of Datadog, but for now we're consolidating under resistance, and resistance could also hold, and you have a big move to the downside. Once again, that would likely need to be the market falling apart, but a break above 120, I think Datadog is a great trade, but it's got to do it first. Don't jump the gun. Be patient. Wait, watch these, keep these on your watch list and wait for the appropriate entries. Because when we force things, that's when we make mistakes.
Alrighty, and we had a question on why don't you write a ebook on your take and analysis of complex waves, zigzags, and present time. And so I think that's a great segue into the zigzag mastery class that you referenced a bit earlier in regards to the material that's going to be covered in those sessions. So yeah, the first session was free, and upon taking up that offer and paying for the mastery series, you'll get 3 very insightful courses and more perks to come with it. So I'll send that link in the chat again to check out. We'll move on to a question here from Manuel on AVGO.
Man, I want to look at that one too, but I'm going to further with what you said. I have written books on this. I have 4 published books by one of the top financial publishers, but I left them and started my own gig, and so they don't offer the books anymore. So you can't go get the actual books. But as Zach said, every piece of the material that I wrote is on our website at ewotrader.com. You go to the main website, click under education area, and anything and everything that you want to know about a zigzag is there, including confirming indicators, etc. So all the material from the book, because I own the intellectual property, is there. So you don't have to go buy the book. It's all there on the website under the education area. So looking at Broadcom, I was waiting for, and this is frustrating for me today. This is a high one on my watch list. We got a little bit overbought yesterday, and I thought we might consolidate right here under this resistance area from December and January, and we blew through it. And now we're even further away from the 10-day moving average. So if we can break back down towards the 250 level, I would be really interested in Broadcom. If you want to get in, if you're in it, no reason to get out. If you want to get in it, let's see if we can't get a little better entry on the next day or two as we come back down more towards the 10-day moving average. That's what I'm looking at. It's on my radar screen. I didn't like the move today. Was disappointed in that. I wanted to see a little bit of sideways stuff right here at 250 and then break above it. I would have felt more comfortable with that. But the market doesn't always give you what you want. And sometimes you move on to other trades. But for now, I'm going to wait and see over the next day or two if we get some consolidation here. And then I think Broadcom is a great one. So that's again why I love this show, because you guys ask such amazing questions and good stocks. All right.
There's no doubt about that. You got time for one more question before we head over to the platform and post the idea?
Yep.
All right, we got lots of requests for Apple.
Apple. Good on you, because man, are they trashing Apple on the financial networks is falling behind. And I've talked about this forever, that I feel like Steve Jobs is probably turning in his grave. Tim Cook and the current administration seems to be happy with just banking cash of the stuff that they already have, the products that they already have, and just upgrading them periodically and getting all the faithful to buy the new products, etc. And they just keep banking all that cash, where Steve Jobs was all about innovation and creating new products. And since his passing, the amount of new products in Apple has been anemic, really, if you want to be honest. And so they're behind on the whole AI thing and everything else. But with all that said, looking at the chart of Apple right now, it's really interesting to me because we are consolidating. We've got a triangle here. We do have a very well-formed 5-wave pattern to the downside, but since we have this triangle, as I mentioned, that trumps everything. You would look at this 5-wave pattern. I like symmetry in the Elliott wave patterns, and this is just beautiful as far as the symmetry in the pattern over these first several waves, the first 4 waves, and we have to respect the fact that that could break down to the wave 5 low, but with this triangle, it could also break higher. But I think you have to lean bearish on Apple until we see which direction this breakout is. And for now, you would move from slightly bearish to just wait and see, because it's a decently formed triangle here. If it breaks to the upside, we still don't take out 61.8 on the wave four. But if it breaks to the downside, we're most likely heading down towards that wave five low. So the market is kind of off the whole Apple train right now. Let's see which direction this triangle breaks, and then we can have a better idea of where it goes. No matter how great that five-wave pattern is, and again, the symmetry is really, really nice. You got to respect the fact that we could break higher out of this triangle. So let's wait and see what comes from there. All right, Zach, I'll let you move over to the platform GSK, and then I'll get ready for the next event of the day.
Very well. Yeah, we'll switch over there now. And to anyone that didn't get their question addressed in today's session, please know it has nothing to do with the validity of your session. As Rob stated, he's got a lots of speaking opportunities, obligations throughout each week. And today there's one that's back to back. So hopefully everyone is understanding of that. If anything is time sensitive, please feel encouraged to write your question into support, and I will make sure it's escalated so Rob can reply and share his insight via that method. So let's head over to the platform. Everyone should be able to see that screen now. Here we are at a menu view, a jumping off point. If everything that the platform has to offer, we're going to go up here to this light bulb to ideas, select new idea. And to confirm, Rob, is this going to be an idea or a post?
This is a full idea.
All right, so we're going to create an official idea, which we can equate to paper trading, as many of you have likely heard me say before. But for anyone that might be new, the reason I say that is because you're going to have all of the same data that you would in the sense of if you were paper trading with any brokerage that you have without just having any risk, any real capital on the line. So we're going to go with GSK as the symbol, as Rob showed, and with that AI score of, what was that, 88, Rob? Was the price 43 that we're looking at?
The score is 86. The price that we're looking at is 44.
Oh, I was slightly off there. So 86 and 44. And we'll go to a time frame of what interval?
Let's do 3 months. That's a decent move for. Well,
3
actually,
months, very well. So as we can see, I selected 3 months or a quarter out. We will come back and make this very pretty with more supporting evidence very shortly after this session is concluded. But as you can see, I am going to go ahead and post this idea. And so that way you can come in and interact. It's available there for you now. And the last thing I'll say is I usually close with is whether you agree or disagree. We welcome you to encourage you to come in and share your thoughts, whether you agree or disagree. Again, you'll have the option up here to vote. Just always obviously be considerate of the community and have your supporting evidence to back up your opinion as to how you feel this trade or idea may go. But other than that, Rob, I know you got to get going, so I'll pass back over to you to add your final thoughts. Thanks for everyone that joined us today.
Sounds good. Thanks, Zach, and second that. Thanks to everybody that spent some time with us. We do value. We're very sincere and passionate about that. Time is the most valuable asset we all have. I thought I would leave with one final comment on this Glasgow, a reminder that we broke that resistance level and we're testing it today. So either we have a great entry or it's going to fall apart, and we'll find out. And if you view that it's going to fall apart, as Zach mentioned, we welcome opposing views and welcome you to post your own and get commentary from everybody else. I can tell you that on the platform, people are very respectful, and differing opinions, as Zach said, makes markets. If everybody viewed the markets one way, there'd be no trading. You have to have a buyer and a seller, or a bull and a bear on every opportunity. And if you'd like to post an idea and have it out there to see what other people think, perhaps you learn something from that. I think it's a great learning experience on having multiple opinions. So as long as you keep your disagreements respectful, we all have conviction with our own views. I think it's a great thing. So we'll watch this over the next couple of weeks, see how it plays out. Thanks as always for your